Guys, over the past several months, we're working on a handful of deals that required very fast closes. All of them were value add properties that range from low occupancy to entire rehabs. This really limited our ability to get traditional loans and required us to get creative on getting them closed. In these sorts of cases, you may opt to do a bridge loan. These sorts of loans are used when a bank or a lender just can't close fast enough, when you're expecting a sale or a refi shortly after the close, and when you need to fund a value add deal that a bank might seem to think that it's too risky. Regardless, this is a great tool to have at your disposal, and getting a good lender in your corner is important to growing your real estate portfolio. Typically, the requirements for a bridge loan are very flexible, much like a traditional loan or a Fannie slash Freddie loan. It, this doesn't mean that they will just hand you cash without their due diligence on their side, though. There are many considerations that a bridge lender will look at when checking out your deal. If you cover the main points I'll outline here, things should go over a little bit smoothly. So, number one, the property. The lender will want details on the property itself. They will want to know about the location, what condition it's in, maybe what the upside of the deal is too. Maybe you are buying just the shell of a property and plan on building it out, or you're putting up a multifamily on some vacant land. In any of these cases, the lender will want to know what the overall plan is with the deal. Share the details on the upside too. If the property is in an opportunity zone, there's a major business moving into the area, or it's in a path of progress, show them the city plan and whatever tax breaks they may get out of it, or you may get out of it. You know, if there is any recent renovations or upgrades to the property, such as HVAC or electrical systems, tell them about it. Ultimately, you're looking to convince them that there is real value in the deal that you're working on. Number two, the plan. I touched on this in the first point. You need to prepare the overall plan of what you're going to do with the property. The plan must be realistic and timely. If the plan is not believable, they will not lend to you. Simple as that. They may want to consider the following scenarios. If you're not doing any upgrades, talk about what you're going to do to get the occupancy up if it's too low, and what the refinance will look like afterwards. If you plan on doing a rehab, what will you want to do with that rehab? Like, what sort of renovations plan are you going to do with that? How much you plan on spending? What sort of upgrades do you plan on doing? You also want to show that you think the property will lease for more after you perform the upgrades. And another thing is, if you're repositioning the property, if you're, say, repositioning a warehouse or a large retail space into a multifamily dwelling, get specific on your plan, about what you're doing, and show quotes from reputable contractors to back up what you're saying. In all cases, show the post-improvement financial plan and the steps of what you're going to do to get that project to the pro forma that you laid out. Number three, your history. When you're looking at getting into any major repositioning project, the lender will want to know if you have done anything like this before. If you have a history of doing wholesaling of houses, for instance, and you want to reposition an old warehouse into a 30-unit apartment complex, chances are they're not going to do a loan unless you have an experienced partner on your side that'll help you execute it. You'll want to show that you've worked on these sorts of deals before. You made improvements, or you met or exceeded targets that you're outlining. They want to know how you and your investors made out financially and the outcome of the overall process. Similar to a traditional lender, they're banking on your ability to execute, so a track record is absolutely key. Number four, your financials. Just like a regular commercial loan, the lender will want to get an understanding of your personal financing and where you stand. You need to show enough liquidity and net worth. The riskier the deal, the more of these two items you need to have. But don't let it scare you. You can take on a partner, and if you do, you can lean on them for their liquidity and their net worth as well to get the deal done. The lenders will also require a credit and background check. If you had any bankruptcies in the past, be ready to explain what happened and how you plan on securing the deal to reduce their risk. For a non-recourse loan, your money is not at risk beyond what you've put into the deal. So if the deal fails, you're not due to pay anything unless it was something illegal or unethical on your part. But all that deep underwriting will become less important for that. And number five, full transparency. Lenders are generally very careful and thorough people. It does not serve you to hide key information about yourself or about the deal and have them discover a problem down the road, that'll jeopardize it. If you fudge your income or you embellish the quality of the property, they're going to find out. Keep in mind that due diligence is something these people do day in and day out, analyzing deals, analyzing investors. If you show that you're trustworthy and clear right from the get-go, and it talks to your ethics and strength of character, it's going to go a long way with the lender. And number 6, be persuasive. I mentioned this in previous videos that sales skills are super important to closing deals. They're also very important to landing financing. While lenders have checklists and regulations, they're still human beings behind the decision making. If you're able to satisfy the items I mentioned above, the final step is to persuade the lender that you're a safe bet and you're going to do what you say you're going to do. This is certainly not a low-cost way to get financing, but it can be a deal saver. Have you ever used bridge lenders in the past? Did you ever ask them for anything I didn't mention? Do you have any preferred lenders? Please let me know in the comments. I'd love to hear from you. If you've learned anything from this video, give a thumbs up and check out our podcast, Bulletproof Cash Flow, in whatever podcast app you prefer. Also subscribe to the new YouTube channel as well. We're working on getting new content out for you guys every day. So, please help our success by helping you. So be great, guys, and I'll talk to you soon. Bye.